In today's video, I'm going to go over how to calculate discounts. And so this is just a brief overview of Chapter 7. And so there are a few ways to calculate discounts. And recall that this is a business calculations class, and we're looking at manufacturers and retailers. And a lot of retailers, they receive discounts for purchasing in bulk from wholesalers or manufacturers. And so here the list price is the price that a retailer has to pay for items from a manufacturer. Trade discounts are the discounts that these retailers receive. Okay, so let's say that we have a list price of $240 and a trade discount of 30%. To calculate the discount amount, or how much they're going to save, you simply take the discount rate and multiply that by the list price. So 30% times 240 gives me a discount amount of $72. So after a 30% trade discount, they're going to save $72, giving me a net price, and I'm subtracting the discount amount from my net price of $168. So after the 30% discount, the retailer only has to pay $168. Okay, there's another way to calculate net price, and that's by using the complement method. So with the complement method, you calculate what's called the complement rate first. And the complement rate is simply 100% minus the trade discount. And so in this case, the complement rate is 70%. Now when I calculate the net price, I'll take the complement rate of 70% and multiply that by my list price of $240. Okay, and that too is going to give me $168. Okay, and so we're basically just calculating 70% of $240. And again, that is $168. Okay, for this next one, we also have what's called series trade discounts. And as your text tells you, a manufacturer or distributor might give additional discounts to customers who buy larger quantities. Okay, and so here we have a first discount of 30%, and then 25%, and then 10%. So it's first 30% off of $1,500. Okay, that'll give you your first net price, and then it'll then be 25% off of your first net price, and then 10% off of your second net price. And so it's not just adding each of these 30 plus 25 plus 10% and multiplying that by the 1,500. You have to do them in increments. And so, for example, my first discount amount is my net price times 30%. So my first discount amount is $450. To calculate my second discount, I need to take my net price minus the first discount of $450. That's going to give me $1,050. Okay, now that I have my net price here, I need to multiply that by my second discount, which is 25%. So 1,050 times 25% is $262.50. My third discount is going to be this number. That's 1,050 minus $262.50. That gives me $787.50 times 10%, which is $78.75. And again, so notice that we're taking the discounts off of the previous net prices. So my final net price is going to be $787.50 minus my last discount amount of $78.75 for a final net price of $708.75. We can calculate the same problem using the complement method. And so my first discount complement rate is going to be 100% minus 30%, which gives me 70%. Okay, and because I'm calculating, and let me just write complement rate. The complement rates. Right now, I'm just going to find the complements of each of these. Okay, so we calculated the complements of 30%, 25%, and 10%. Now that I have all of the complements, I'm going to take the net price of $1,500 and multiply that by the complements. Okay, so you can do by 70% times 75% times 90%. And this too will give me $708.75. Okay, and now we're going to calculate what's called the single equivalent discount rate. The single equivalent discount rate is basically all of our complement rates, just multiplied together. And I like to call this SEDR for short. And let's take a look at this example. So when we're taking a calculation for our single equivalent discount rate, or our SEDR, we first compute the complements of each rate. So that's these steps that we did right here. Okay, we'll multiply all of them as decimals. We'll write the product as a percent. And then we're going to subtract that from step 2 from 100%. Okay, so I'm going to start off with the 50%. Okay, and 100% minus 50% is 50%. As a decimal, that is equivalent to 0.5. Next, I'll take the complement rate of 30%. That equals 70%, which is equal to 0.7. And then finally, the complement of 10% is 90%, which is also equivalent to 0.9. Okay, and this was step 1. For step 2, I'm just going to multiply all of them together. So 0.5 times 0.7 times 0.9. Multiplying them together gives me 0.315. And remember, it says to write the product as a percent, so that means that 0.315 is equivalent to 31.5%. Okay, now it says step 3, and this is calculating the actual single discount rate. I'm simply going to take 100% minus my answer in step 2, and this gives me an SEDR of 68.5%. And all this is telling me is that if I had a list price of, say, $1,000, to calculate the series discounts, I would simply multiply 1,000 times 68.5%. And the price after the series discounts would simply be $685. So we just use this single equivalent discount rate to help us calculate our net price. And let's take a look at this example. Here it says to compute the remittance. When we do this, you need to multiply the discount rate by the net purchase amount to get the cash discount amount, so how much money we saved. And then you need to subtract that cash discount from my net purchase amount. Okay, and so here we're going to get into terms of sale. And our terms are always separated into two sections. Here you have a 210 and then an N30. And so I'm going to write this on the side, and I'm also going to make this a little bit larger. So the first numbers, 210, the first number will always stand for the percent discount. And then the second number is the number of days for the discount. So this means that if they pay within 10 days, they'll receive a 2% discount. So if you had something like 115, this would mean that we'd have 15 days to get a 1% discount. Okay, you might even have something like 320, where you'd have 20 days to receive a 3% discount. Okay, so let me get rid of these numbers here. Just so it's out of the way. Okay, and then the second set of numbers, in this case it is N30. The N stands for net amount. So the entire bill amount is due within 30 days. So this is how many days until the entire bill is due. Okay, so a company might not always pay within this discount period, within the 10 days. If they pay, let's say, after day 15, then they won't get this discount. But the main thing is that they pay within 30 days of their invoice. Okay, sometimes, just as an aside, you might even see a dash instead of this /. So 210. This still means the same thing. The first number is always the percent discount. And then the second number is your discount period, or how long you have to get that discount. Okay, other days that you might see here are N45, which means that you have 45 days to pay your bill in full, or you might even have 60 days. Okay, so let's say, and here it says that compute the remittance due if Broadway Motors pays National for a $528 invoice amount, and they paid within the discount period under 210 net 30. So the first thing we're going to do is to calculate the cash discount. My cash discount is the discount rate, so that's 2%, times the invoice amount of $528, and this gives me a discount amount of $10.56. So I know 2% is really small, but over the long run, these tiny discounts do add up. Okay, so this is my cash discount amount. So we save $10.56 for paying within 10 days. And now my remittance amount is simply the invoice amount of $528 minus my cash discount amount. Okay, and that tells me that we owe $517.44, okay, within this 30-day period. Okay, sometimes you'll come across problems in where there are returns or even freight charges. And so what I'm going to need to do is to just make this a bit bigger because there are a lot of things that I need to enter here. Okay, and you'll notice the things that I need to find out are a lot more than what I was calculating up here. So I'm going to have to figure out the end of the discount period, the due date, the net purchases, the cash discount, and the remittance. So let's take a look at these terms. The terms are 110, so 1% if paid within 10 days, and N60. So we have 60 days to pay off our entire bill, whether or not we did pay within that discount period. We have an invoice date of August 24th, an invoice amount of $852.43, returned goods of $187.23, and then a freight amount of $47.20. Okay, so my end of discount period, also known as my discount date, so the last day I have to get my 1% discount. And notice here that we don't have just numbered days. We have August 24th. The terms were 110, meaning that we have 10 days after August 24th until our discount period ends. So in Laulima, I've uploaded this days of the year calendar. Okay, and so here we have the day of the month in my furthest left column, and then we have all of the months here. So if you take a look at this, January 15th would be the 15th day of the year. Let's say December 23rd is the 357th day of the year. And so when we use this calendar, we want to look at this invoice date, August 24th. So here's August, and then 24 would be day 236. So I'm writing this right below it. So day 236. And then I'm going to add 10 days to figure out the end of the discount period. So 10 days from August 24th is going to be day 246. Okay. Now that I know the number of the day of the year, I need to look for day 246 here. And that tells me that September 3rd is day 246. Okay, so September 3rd is the last day of my discount period. My due date, remember we have N60, which means that it's 60 days from my invoice date. So I'm going to take that 236, which is also equivalent to August 24th, plus 60, and 236 plus 60 is 296. So I need to look for the 296th day of the year in my calendar. And 296 happens to fall on October 23rd. So don't worry about leap years or anything like that when you're doing the days of the year. Okay, so my final bill is due 60 days after August 24th, which falls on October 23rd. Okay, now we're going to calculate the net purchases. Your net purchases is your invoice amount minus any returned goods and also freight charges. So that's going to be $852.43 minus $187.23 and minus $47.20. And this gives me a net purchase amount of $618. Now I can calculate my cash discount. So my cash discount is my net purchases multiplied by the amount in our terms, or this rate here. So that is times 1%. And so by paying within that 10-day period here, we save $6.18. So that's our cash discount. As for our remittance, that's my net purchases minus the cash discount. And then we need to add back the freight because we don't get discounts on our freight. And that gives us $47.20. Okay. And this gives me a remittance amount due of $659.02. Okay, we can do the same thing by calculating it with our complement method. And again, I'll just make some space here. Okay, so here again we have that 110 net 30, 110 net 60. We have the same date of the invoice, the same invoice amount, return goods and freight charges. So I'm calculating my net purchases the same way, and that's by taking my original invoice amount and subtracting any returned goods and freight charges. So think about net purchases simply as the price of the goods that are being bought. Okay, and this was $618. My complement rate is simply the complement of this 1% of my terms. And that's 100% minus 1%. And this gives me a complement rate of 99%. So my cost of my merchandise, and remember that 99% is equivalent to 0.99. So that's 0.99 times my net purchases amount, which gives me $611.82. Okay, so that's the cost of the goods that I purchased. Now the remittance amount is the merchandise cost plus the freight cost. And this gives me $659.02. Okay, in this next example, we're going to look at partial payments. And so sometimes businesses are going to pay off their bill or part of their bill by the discount period, so they at least get some discount. And then they might pay off the remainder still within the end of the discount period, such as within 25 days or 30 days. Okay, so let's say that we have an invoice for $476 has terms of 115. So if they pay within 15 days, they get 1% discount. Net 30, so they have 25 days to pay their entire bill. How much is the unpaid balance after a $350 remittance is made within the discount period? Okay, so the first thing I'm going to do, which is step 1, is to compute the complement of my discount rate. So 100% minus the discount rate of 1% is 99%, which is also equivalent to 0.99. Okay, step 2 says to compute the amount credited by dividing the dollar amount paid by the complement rate. Okay, so they paid $350 divided by 0.99 or 99%. Okay, and so even though they paid $350, they're credited for $353.54 since they paid some of that within this 15-day discount period. Oops, not account, but amount credited. And then I need to calculate my unpaid balance. So the unpaid balance is my invoice amount minus the amount that was credited to their account. And in this case, that is $122.46. And that's how much they still need to pay within $25 of their invoice date. Okay, and let's take a look at this last problem. So we have the same numbers here. The invoice amount was $476. The terms are 115 net 26. But this time it's asking what size remittance should be made in order to have a total of $350 credited to their account. So the first thing I want to do is to calculate my cash discount amount. To do that, I'm going to take the $350 and multiply that by the 1% here. This gives me $3.50. The remittance is the amount that I want credited, so $350 minus the cash discount amount. And so what this is telling me and what I just calculated is how much I'd have to pay within that discount period for $350 to be credited. Okay, so this tells me that if I paid $346.50 within this 15-day discount period, I would have $350 credited to my account.